Hey, everybody, what's going on? And welcome in Sunday evening to our latest TDR Small Cap Sunday podcast. I am your host, sdales. 5 new companies getting underway. We had some good feedback from last week's show, and we'll have some more even better this week. What are they? Well, let's welcome in TDR lead financial analyst, Bill McNarland. Happy Sunday evening. How are things, sir?
Things are great. Had a nice, relaxing weekend. What about yourself?
It's been busy. I don't know if you saw earlier this week, but I was in Washington, and it's just
Mm-hmm.
mayhem for the rest of the week. But for the most part, it was good. I volunteered to coach my daughter's baseball team. And of course, all the parents want tryouts to happen here in the fall versus next spring. So it's been chaotic, but a good chaotic. It's always good to be busy. But listen, I know you put in a lot of time and effort towards our latest 5 stocks. Tonight, we're actually going to be looking at a trust who owns royalties in oil and gas, an investment company, an IT distributor, and a 3-generation coffee company, and amongst 2 or 3 others. So let's get into it. All views on the Small Cap Sunday podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice, and the views on this podcast are solely intended to be informational and are not investment advice. Okay, let's begin. First company, it's a company called Chesapeake Granite Wash Trust. It trades on the OTC Pink Sheets under the ticker symbol CHKR, located in Oklahoma. Current share price 40 cents, market cap 18 million, shares outstanding 46 million, and daily trading volume is only 13,000. So why before we get into the what's unique about this company, as I like to as always, what's been the 52-week range for this stock?
Yeah, so the stock's trading for 40 cents, has been between 40 cents and $1.09. It's at its low. But what's unique about this is it has a 23% dividend yield.
I saw
So,
that.
so what's the story here, right? So these trusts are really misunderstood. So I thought it'd be good to have one on the show. They can be excellent things or they can be traps, depending. And if you notice, if you Google how to invest in these, you'll notice a lot of lawyers' lawsuit websites come up. And that's because a lot of people were sold these or they bought them and they didn't understand what they were. And so if you understand it, these things can be fantastic. So we'll look at these a little bit more in detail.
Yeah, so this is the first time covering a US royalty trust. So when you look at some of the stuff that people don't understand, like what gets them, I guess, hooked on to investing in this space in the first place if they don't understand it?
People love yield. We know that it's very
Of
attractive.
course.
So they see 20% plus yield. They're like, wow, that's great. I need that for my retirement. But royalties are not always forever. So we once looked
Okay.
on the show at Boston Pizza Royalty Fund. That's a long term royalty structure.
Correct.
This royalty structure ends in 2031. So you're not going to receive anything after that, likely. So you have to calculate out saying, okay, we have 7 years of income, 8 years of income.
Yep.
I'm making 23%. Oh, well, maybe that's actually, I'm going to double my money over the next 7, 8 years, but it's not going to go on forever. So you have to factor that into the calculation.
Okay, so you've outlined that this trust in particular is in the natural gas, and if natural gas spikes, royalties fly. You want to elaborate off of that?
Yeah, so there's a number of ways to play these. One, they just bounce around in price because they're dependent on the price of the underlying.
Yep.
Secondly, these groups that have dividend companies, paying companies, they try very hard to keep the dividend stable. These ones, they just pay out what the excess cash is, so the dividend yield is going to change as well. So it's dependent on the commodity price. And then people get excited. They see the yield. They start trading them all around. There's a lot of volatility. So they're exciting if the yield is going to go up because of the price of the commodity.
Yep.
That's an interesting time. But generally, just buying these things when they're really beat up. Usually, in the next year or two, there will be a time that they will spike.
Well, it'd be interesting to see what happens at this U.S. election because I know Kamala Harris has come back and basically changed her stance on fracking, but we all know where Donald Trump sits in that equation. But in the event that oil and gas does come back and come back strong post the election, then what you're saying this could be a viable time to be worth looking at something like this.
Yeah, and the income can be tax effective too, depending on where your country of residence is. So it's interesting. You got a double play here on the commodities, some income, maybe some tax effective income. It's something that's pretty intriguing to look at.
All right, let's go to the charts. Let's look at revenue over the past 12 months along with her growth percentage. It's showing what?
Yeah, so we're gonna. This is a great way to understand these. So the market cap's 18 million. The revenue was 6 million. The revenue pretty well flows out completely. The gross margin's 100% because they just flow
Okay.
this stuff out. And there's some legal and accounting costs that have to be paid for. So the SG&A is around 27% or 27 cents on the dollar. Then after that, people get the money. Now, the revenue growth in the last year went down 56%, but over 3 years is up 26% a year. So these are just going to bounce around with the price of commodities. But what I love about this is a pure play. You don't have to worry about stuff like this structure is not spending money on drilling. They're not buying new properties. They're not out marketing different things. It's just a pure royalty on an asset.
Volatility indeed, just outlining some of those numbers. Okay, gross margin. It showed what?
Yeah, so the gross margin is 100%. They just pay out everything, less some accounting and legal fees. So this
Okay,
is shows you the beauty of a pure play of a resource.
great. Balance sheet, current cash position, and working capital showed
Yeah,
what?
they keep a little bit of money around, so they got $3 million in the bank.
Okay,
The breakup value of these is showing at $10 million. That's been depreciated down, so I don't think that's accurate with the U.S. GAAP accounting. So the balance sheet's not going to tell us much. There's some cash, so there's no debt though. Sometimes these structures can have debt. That's something to avoid. This one doesn't, so that's a good double check there.
23% dividend. Looking at their cash flow statement. Yeah, that's strong, right?
Yeah.
All right. Moment of truth time. Would you own this stock? By the sounds of it and the excitement and the interest level, we get our first green check mark of this evening, correct?
Yeah, why not? It's something if you want to pure play to natural gas. Natural gas, it'd be something that I would want to own a little bit of right now. And this is a way to get some income out of it, as long as you understand that the income is going to end in 2031, and that's something I understand. So it's something I'd be interested in.
Okay. So there's your first green check mark. Let's go to our second company here this evening. Company called Clarke Incorporated. Ticker symbol trades on the TSX under the ticker symbol CKI. They're located in Halifax, Canada, which is eastern Canada along the Atlantic seaboard. Current share price $23.85. Market cap of $333 million. Shares outstanding 13.9 million in daily trading volume of 45,000. First up, 52-week range for the stock is showing what?
Yeah, so this has taken off. It was trading between $13 and 25. It's almost at $24 this week. So this has had a run up. It's up about 70% this year. The stock has done very, very well.
Okay, notable name now. I wanted to find unique about this company, but I know you brought him up in the past. But who's the founder of the company?
So George Amoyan, so this would be Atlantic Canada's Warren Buffett, different from the other one that we talked about, Prem Watson, that was in Toronto. This is a
Represent,
gentleman.
right?
Yeah, pardon me.
It's represent. Doesn't matter if it's Atlantic Canada. Hey, if you're the Warren Buffett Atlantic Canada, I'd wear that badge.
Yeah, this is interesting. I used to do a lot of work out in Atlantic Canada. I used to have I
Okay,
had a property I bought just outside of by Piggy's Cove, Nova Scotia, and so I used to learn about the culture. And I kept hearing this name about this gentleman, and everyone was really proud of the fact that this was a family that immigrated from Syria. There are Armenian, I should say, and this was the gentleman George, the son.
yeah,
He was in the U.S. and found out that it was so much cheaper to go to university in Canada. So he said, "Well, here's an arbitrage opportunity. I'm going to go to Halifax, Nova Scotia, to get a good education there." And so he came, and his family came, and they just became entrepreneurs. And the dad was a jewelry maker, a watchmaker, and then
yeah.
also a photographer. And then the son, they got into real estate. And so then I came across this company that was out there, and it had interest in ferry services, interest in real estate and apartment buildings and hotels in the oil industry in Alberta. I said, this is interesting. Then I saw whose name was on there. I said, wow, this is fascinating. I
There you
want to
go.
learn about this business.
Well, look, there's some great schools in Eastern Canada. They're kind of like the Ivy League schools, Mount Allison, Acadia University. There's some great education, and there's a lot of actually Americans and people from abroad internationally that actually attend those schools out east. Okay. Biggest thing I think of anything when it comes to this is what kind of contracts do they work with? What'd you find?
Well, the ferry service has government contracts where they have this ferry. It goes across the St. Lawrence Seaway in Quebec. There's no bridge going to be built there, and it needs service because driving around would
Okay.
take 5 or 6 hours. So that was an interesting business. And then they invested heavily in hotels and oil areas in Fort McMurray and in Grand Prairie, Alberta, and also in the Arctic.
Okay.
And then also building a purpose-built apartment buildings as well. And so that was an interesting collection of businesses that I wanted to dig some deeper and take a look at the financials on.
All right, let's take a look at the financials then. What are we seeing as far as revenue over the past 12 months, along with their growth percentage again?
Yeah, so this is real. $81 million of revenue last year. They had revenue growth of 10% over 3 years, was 25% a year. A nice gross margins at
Yeah.
45.7%. But this is something I respect about this business. They're not overly spending on anything. Their SG&A is only 4.7. So
Wow.
they're being very conservative. They're not starting any online stores, to market themselves. This is something that's just an interesting business, cash flowing business. So they had EBITDA of $30 million last year. So that was very, very respectable. So the stock has ran up, and we can see why. But still, just trading at 10 times EBITDA, it's still a reasonable value here.
No kidding. So when you look at the daily trading volume, like what's missing here? Because like you said, average is around 45,000. What do you think people are missing here?
Well, the stocks ran up, so I don't think it's missing anything. I think people are starting to catch on, and the more that volume is added to, that definitely can push. But more people will become more and more interested. I think as if the company keeps putting up numbers like this.
Okay, balance sheet again, current cash position. How about working capital showing what?
So this is interesting. So the cash is only $1 million. They keep a tight ship there, but the working capital shows as negative 35 million. And this is where you have to be careful when we're looking at anything that's invested in real estate, because if
Yep.
you take a variable rate mortgage on hotels or on apartment buildings, they show as a current liability, and it messes up your balance sheet number. So you can't rely on the information, and that's something that I confirmed here. So it's just something that is just a nice to know, but it's not necessarily relevant just because of how accounting works.
Okay, so based off that information, what are you seeing then as far as an overall credit score?
4.7 with a breakup value of 232 million after it's been depreciated down. So this has a lot of value in this company. It's a shame that we're talking about it now compared to where it was before it ran up in price, but still there's some good value at these levels as well.
Worth noting though, levered free cash flow, it showed what?
Yeah, 3 million, and that's because they spent 11 million in capital expenditures as well. So
Okay.
$14 million they have to reinvest in the business. That's strong, and we know that it's a real based on the cash flow.
All right, moment of truth. Curious to see. Would you own this stock?
Yeah, I love collecting interesting businesses like this. It's like a little Berkshire Hathaway, collecting some excellent things that are interesting, especially the ferry. How are you going to invest in a government-run contract ferry? That's something that's pretty interesting.
All right, so we got two green check marks. And now on to our third company as we head south of the border in the state of New Jersey. It's a company called Climb Global Solutions, trades on the NASDAQ under the ticker symbol CLMB. Current share price $102. Current market cap 427 million. Shares outstanding 4.4 million. Daily trading volume 2 million. So we're getting some action here, Bill. Walk us through what the 52-week range has been for this stock.
So this stock has run up as well. It was $40 at its low, and now it's at 102, which is its 52-week high. So people have been
Wow.
getting excited about this stock and what it's been doing.
So what are people excited about? Why is it garnering attention?
So this is a software reseller, and so what they do is they go into your company and
Okay.
they find out your business, what you're doing, and then they have solutions for you of software you probably haven't heard of. So all of us have heard of Microsoft Office, we've heard of QuickBooks, but we probably haven't heard of stuff like Puppet, Zendesk, or Kiteworks, maybe. And so these are solutions that are very valuable, but it's just too difficult for these companies to individually market themselves. So instead, they go to a wholesaler like this that goes out and provides these solutions. So the beauty of this business is they get the upside of the growth of software,
Okay.
but they're not spending money trying to develop software or trying to get to profitability. They're taking a suite of stuff to businesses to provide solutions.
Okay. Notable names that they work with right now?
Yeah, so we can pull up a chart here. It's huge lists, and so probably we're familiar with some of these different ones. I know, for example, Zendesk was something I've made use of before.
Okay.
Open Text, for example, as well. But these are all different things, and the idea is that a lot of these you're not aware of. So when they come to your business and make suggestions, there's value being added there.
All right. So current share price of $102, market cap 427 million, daily trading volume of $2 million. But that is, like you said, the 52-week high of $102. So let's now go to revenue. Last 12 months and growth percentage is showing what?
Yeah, so their revenue is 370 million. It's real. They had 11.4% growth last year. Over the last 3 years, they've been compounding just under 12%. So that's excellent. It's a growing business. They're catching the ride in software, but they don't have the risk of development.
Okay. Gross margin then, because of that risk is taken off, is showing what?
Yeah, it's almost 20 cents on the dollar, and then their SG&A is only 13 cents on the dollar. So
Okay.
a lot of times we see that flipped over when it comes to software companies, and that's why they have a negative income for so long. But this has a EBITDA of $23 million. So this is a successful growing business model.
Hence the reason why you're seeing the interest. All right. Balance sheet, current cash position as well as working capital shows what?
Yeah, they got $48 million in cash
Wow.
and working capital of $21 million. So there's no concerns here. They're just growing away in a reasonably safe balance sheet as well.
Okay. Levered free cash flow.
Yeah, it was
And
29 million last year. So they're doing just fine. The cash is real. It's matching similar to their EBITDA.
okay. Before I ask whether or not you'd own this stock, do you think there's more upside potential pertaining to it?
So as long as software is growing, and we know that it's just going to continue to grow, there's going to
No
be new
kidding.
applications come out, and they need marketing, and so this is a viable business model for sure.
That's great. All right. So this is the three. This could actually be one of the strongest companies you've ever covered. So you would own this stock. Yes. We got three green check marks, correct?
Yeah, for sure.
All right. We down. Three down, two to go. And usually every single week. Fourth is always our trap stock. So let's take a look at this one and see if indeed history repeats itself. Fourth company, Chicago Rivet Machine, trades on the New York Stock Exchange under the ticker symbol CVR. They're obviously located in Chicago. Current share price $18. Market cap 16 million. Shares outstanding only a million. Daily trading volume $50,000. 52-week range. What's this stock showing right now, Bill?
Yeah, so the stock's trading at $18. It's between 14 and 21. Pull up a chart here. We'll see it over the last 40
Okay.
years. Hasn't
Yeah.
really moved much. And so it's kind of been in that range between 10 and $20 for most of the last 40 years. So the business has been around since 1920. So I said, well, let's check in to see what they've been up to in the last 104 years and how they're progressing.
Yeah, so let's fast forward 104 years. What is up with this company right now? What makes it unique? What are some challenges you're seeing?
Let's take a look, in manufacturing, software development, or anything. And I picked
Yeah, yeah,
this
yeah.
example today because there's one thing we wanted to look at, and we're just going to look at the income statement. And,
Okay.
and you know what? And there's something that sticks in my mind this year. It was actually from an interview that you were doing with the CEO of a company.
Okay.
And he made a comment about growth in a company is purposeless if you don't have decent gross margins. And I had to think about that for a comment for a second. I
Seems
thought,
like common sense.
it's actually it's common sense. And so you look at this company. So their revenue is $30 million. We see on the chart here that's real,
Yeah.
but their revenue growth is slipping a bit. It's down 5% on the year, flat over the last 3 years. But the two numbers we look at, their gross margins 4.6%. So when they sell $100 of a rivet, they're making $4.60, but it's costing them $18.20 of SG&A to market it. You just can't do that.
You see that a lot in the small cap environment, don't you?
Yeah, and this is the whole problem. If people and you don't, no one talks about this type of analysis, but
They
if you
don't.
want to analyze small cap stocks quickly, take a look at SG&A compared to gross margin. And if the SG&A is higher than the gross margin, the business just doesn't currently work. There's no point growing sales.
There's your clip of the actual podcast here tonight. Look at the SGA and gross margin, and that'll give you an idea. And I think in a lot of times, look, a lot of small cap investors, we look at stuff that's hot and what's going to move in the next short term. But I think if you could really, really outline something that stands out more, what you just said makes a lot of sense. But in this particular case, obviously, this is a model that's not on for sale. It's more or less a trap, don't you think?
In 104 years, it's still proved challenged. So it's not the length of how long a business has been around.
Have they dealt with issues like this in the past?
You look at the 40-year chart, they've obviously had some better times and some challenging times, and you can see that in the stock. but overall, it just hasn't had that critical mass of growth that a company needs for long-term sustainability.
Yeah, no kidding. Okay. All right. Moment of truth. This is our first Red X, correct?
No, yeah, it's an example. It's a teaching example, and it's an
I think
example
it's a
of
great
something we
example,
wouldn't
though.
want to. Yeah.
Yeah. Biggest takeaway, look at gross margin, S, G, and A when you look at any small cap stock. If you don't say you didn't get told about it. All right, so we got 3 green check marks and 1 red X. Now time for our final company of the evening as they bring it up. This is a 3-generation coffee company. And as they say sometimes, Bill, in life, it takes 3 generations to kill a business, but it's defying the odds, I think, with this last company. It's called Coffee Holdings Incorporated, trades on the NASDAQ under the ticker symbol JVA. They're located in Staten Island, and current share price $3.31. Market cap is 19 million, shares outstanding 5.7 million, and daily trading volume is 300,000. First up, again, 52-week range. Share price stock is showing what?
So the stock's been strong. We see here it's went from 66 cents was the low and 388 was the high. So it's trading near the high at $3.31. And so that's a sign that something's been going on here.
Founding a lot of companies here tonight have been recently moving, right? And I think a lot of people always
Well,
ask these questions with feedback to say, what's going to move in the next short term? But what have you noticed here the last, I guess, month pertaining to this stock and how much it's moved?
it was doing right things. The financials were moving in the right direction. They also had a news item that they were working on a merger that they canceled with another company. So that was a bit of a news.
Okay.
But it's the finances have been going the right direction. They paid off all their debt in the last year. They're now going on a debt-free structure that saves a lot of interest costs. So things have just been moving in the right direction. And when these companies, these small cap companies, move in the right direction, the stock's going to take off.
Okay, good to know. All right, let's find out more about this company. What do you like about it, and what do you find it unique
Yeah,
about them?
well, I like the coffee business. I've always been interested in it. I enjoy coffee a lot. So does the family, and so this is I'm always interested in coffees coming from different regions, and then also having different spectrums of taste. And there's very broad spectrums in taste in coffee, especially with the acidic levels. And so this is interesting. They offer that all on a wholesale basis, and then they also do their own roasting as well. But I just thought it was so interesting how long this business has been around, and they're so passionate about coffee that I said, I want to take a look at the financials, and it reminded me of another business that was quite successful that I was aware of, and so I said, I want to take a peek at see how this is looking.
So, what makes the industry, for those not familiar with it, but how lucrative of an industry is the coffee industry being in it?
I think it's a passion area, similar to other groups, maybe like wineries that we look at. You have to make sure that you have quality product, but that you can pass on the price without high SG&A. So a lot of these companies get into trouble because they spend so much on branding and trying to establish
Yes.
themselves as
Yeah.
something that's not unique. But if these companies can bring in coffee that's extremely unique, and then not have to spend, and then also take, it's kind of a get rich slow scheme because it takes 40 years to build this up, and they've already done this. And then those types of companies can be successful, but it takes time and passion.
Well, when you look at certain brands, like, yes, certain chains have manifest, or I should say, have developed and branched out into coffee. Like you look at companies like Tim Hortons, but at the end of the day, let's face it, people love the coffee. So, yes, branding. There's a lot of SG&A that is required within these spaces or this industry to specifically. But I'm not a coffee drinker, but from what I understand is that if you have a product that's really, really good, especially in a very highly competitive industry, then easier said than done, but if you've got it, then it's lightning in a bottle, right?
Yeah, correct.
All right. So again, companies based out of New York. Let's take a look now at their balance sheets. Revenue, the last 12 months and growth percentage showed what?
Yeah, the revenue over the last 12 months was 76 million. Growth
Impressive.
last year was 17%, 1% a year over the last 3 years. But most importantly, the gross margin is 19. Their S and G&A is 17.2. So they got a spread. So they have EBITDA of $2 billion off those sales. So that's real. they're managing their income statement and their spend on SG&A.
Okay. Gross margin showed what?
It was 19 and SG&A was 17, so they got a spread, and so they're doing well there, managing their spend on the brands.
Okay. Current cash position and working capital showed what?
Yeah, so it's 3 million in cash, but they have 18 million in working capital. So that's the same size as their market cap. So there's hidden value here. There was huge hidden value when the stock was trading near its 52-week low. But still, investors realized this, they saw it, and so they started buying. But still, the breakup value is 24 million of the company with a credit score of 5. So it's still a lot of value here,
Yeah.
even though the stock has run up.
All right. Switch now to their cash flow statement. Levered free cash flow and credit score showed what?
The credit score was 5, so they're doing just fine. The leverage free cash flow is almost $5 million in the last year. That was almost what their market cap was earlier in the year. So they were almost trading for one times cash at one time. So this is what happens when stuff gets silly cheap. Eventually, with some time, these things pop. And the coffee business is kind of recession proof as well, but also it
No
passes
kidding.
on inflation.
Yeah.
So these are
Why is that?
interesting inflation plays. It's recession proof. People need their coffee, right? And you're not going to
Yeah.
change drinking a staple, when it gets a little bit more expensive.
Yeah, it's a good point. All right. Fourth green check mark here this evening, I would think. Would you own this stock?
Absolutely. It's I'm a coffee drinker and enjoy this and this type of business. And this is a good time. Coming around 40 years later is a good time to get involved in this business instead of when they were starting.
Good finds here this week and good education piece, obviously outlining the SG&A and gross margins, which is a pretty good indicator to say the least, pertaining to every small cap stock. Before I let you go, I'm curious to know, with the US election coming up, what, in 6 weeks, 5 weeks? What are you thinking as far as the small cap space and how it'll perform in 2025? Have you given it much thought?
Absolutely. The elections proven in history to be all noise and completely irrelevant.
Yeah.
It doesn't
So,
matter who gets in. If we look back in history, it's not the stock market performance and small cap performance has not been correlated like people think to the elected leader. The best, the most what happens is during times of challenges, stocks do bad. During times of good times, stocks do well. Who's in office is irrelevant.
okay. What do you think happens in 2025? Have you kind
Oh,
of looked out?
I think there's going to be a shift. Small caps have been more beat up than they
No
ever have been
kidding.
in the last 4 decades, and there's eventually going to be shifts. I think typically we see rotations outside of the sectors that are hot, and I think that's going to come out of technology or the top technology stocks. I already saw this. I saw an interesting piece came out from Morgan Stanley this week, where the growth rates of AI companies or focused
Yep.
on AI are now less than the expected growth rates of the Standard and Poor's 500. So eventually these trends change, and small caps will come back in favor at one point.
Had an interesting conversation last week as well. And it sounds like there are a number of psychedelic companies that are going to be going public in the new year as well. So there's some big money and some very sophisticated people with big pharma backgrounds that are now getting involved. And what I'm seeing and hearing is that there was a lot of companies in the first stage that really weren't companies that have gone away. But don't kid yourself and fall asleep on that industry because there's some incredible IP with regards to some of the companies in that space right now, including Cybin, Compass, Atai, MindMed, which is huge, and their medical officer with 30 years of FDA background experience. But I thought you might find that interesting because that's a space that you fall a little bit. So the
Oh, for
curious,
sure. Yeah, I believe in that thesis totally. It's the first railway companies weren't the ones that made the fortune,
yeah,
and it's going to
exactly.
be the same time over time. It'll be the second entrance. It's usually the third owners of the golf course that make money.
Love the way you put it. All right, my friend. Well, listen, enjoy the rest of your weekend and
Yeah,
appreciate it. We'll check back in with you next week. Okay.
sounds good.
All right. Thanks, Bill. Hey everyone, thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.